Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and we got a lot to cover today. I want to go over this whole BlockFi thing, which I think is quite worrying. I have got some stuff to show you about Bitcoin mining, and I thought this is a good opportunity for me to explain this little mining trick that we may be living through right now. And I want to show you some record levels of oversold stuff, and then I want to wrap it up by basically showing you that the collapse of the dollar is absolutely imminent. So if that sort of thing is the kind of thing you like to watch, then make sure you hit that subscribe button, drop a like on this video, and let's get into it. I posted a video yesterday about a global blackout and the freezing of the financial system. So if you haven't seen that, make sure to watch that afterwards. It's really important that you understand what's coming. I'm going to be covering this with increasing frequency over the rest of this year, really. So make sure you see that if you haven't already. Bitcoin has just dropped below the previous all-time high for the first time ever. It has never ever done this. We've just breached 20k. So is this a paradigm shift, or is this just some games being played? Well, of course it's the latter, and I'm going to prove that to you in just a second. First of all though, if anyone's using BlockFi, I would highly recommend you get your Bitcoin out of BlockFi, and not just BlockFi. I'm not picking on BlockFi particularly. It's just these are one of the biggest lending platforms, but anywhere that lends crypto out, just get your Bitcoin off, put it on cold wallet, do this ASAP. Don't take any risk. If it's not your keys, it's not your Bitcoin. Remember that Bitcoin is the ultimate bearer asset, but only if you bear it. Okay, only if you choose to take ownership and responsibility for your own keys, for your own Bitcoin. Okay, so get it off exchanges. Don't trust anyone, because there's an awful lot of games being played. There's a lot of companies going broke. There's a lot of companies firing people. BlockFi is one of them. I'm going to show you this. BlockFi was one of the companies that liquidated 3 Arrows guarantees. And so you scroll down a bit, and 3 Arrows Capital were failing to meet margin calls. So BlockFi have said, oh, they've had to liquidate some of the financial guarantees and all of this sort of thing. BlockFi seeks to quell fears amid fallout from crypto hedge fund 3 Arrows Capital. So what they did was they jumped on Twitter and said, BlockFi can confirm that we've exercised our best business judgment recently with a large customer who's defaulted on an excessively high margin loan. We fully accelerate the loan and fully liquidate or protect all associated collateral. So they're trying to let everyone know that it's not a big issue, but at the same time, don't look at what they say, look at what they do. And what they do is lay off 20% of its staff on this recent Bitcoin plunge. So that's not something you do if you're more than comfortable about remaining solvent in the near term, is it? So not just BlockFi, but if you've got any crypto staked anywhere on a lending platform, just put it in cold storage. Better safe than sorry, right? I found this tweet from Adam Back. If you know who he is, you know who he is. If you don't, go and do some research. He says, everyone has their pet macro views. My guess, the stock market in US election season, of course the midterm elections being November this year, moral hazard is going to kick up. QE, quantitative easing, aka money printing, ramps up again, okay? Rates drop again. Money printer goes into overdrive. Of course, as I keep telling you, when they eventually turn this printer back on, which I think is not far off now, every time they do it, it requires exponentially more printing. So interest rates overhang falls off, and Bitcoin will decorrelate somewhere along the way once the DeFi flush is over. Okay? So it's nice to see that what I've been preaching on this channel ever since its inception really is also the perspective of minds much greater than my own. Bitcoin is below electrical cost now. The average miner is facing serious stress. So what does this mean? If you look here, we've got this red range below the Bitcoin price. And what this is, the upper bound is defined as the most inefficient miners, and the lower bound being the most efficient miners. So all this really means is the miners that are efficient, they can afford to mine Bitcoin at these levels at the bottom, and then the less efficient miners, the ones that have smaller operations, the ones that have to pay more for their electricity, more for their cooling, more for their energy, so on and so forth, those ones are the upper bound, right? So when the Bitcoin price is above this whole range, what that tells you is every one of the miners is in profit. They're profitable businesses, right? But as the price starts to dip down, then as of right now, only the most efficient miners are actually profitable. Many of them will be operating at a loss. As they operate at a loss, because they're inefficient, they will be forced to turn their rigs off, right? And so I've got this little trick here in which miners use to squash out the competition, so I thought I'd share that. The efficient miners, the ones that can afford to mine at much lower prices, they can dump a lot of Bitcoin and force the price down. Once the price is forced down, it takes out the less efficient miners because they can't afford to operate at a loss over a long period of time, and many of them can't afford to operate on a loss at all. And so it takes these less efficient miners out because they're forced to turn off their rigs because they can't just pay electricity if they can't recover the cost from selling the Bitcoin. It also hurts their ability to pay loans. Many of the miners take out big loans in order to afford the ASIC machines, the computers they use to actually mine Bitcoin. So in doing so, they take these miners offline, and it hurts their ability to pay back the loans. It stops their income dead because their income it only comes from them mining Bitcoin and selling that Bitcoin into the open market, right? So this forces them to sell their Bitcoin that they hold in their reserves, and it also forces them often to sell their actual mining rigs for cheap, especially if they've got loans. If they didn't have loans and they own it all, that's fine, but typically they will take on loans in order to buy the ASIC rigs to mine. So they're forced to sell their Bitcoin, they're often forced to sell their mining rigs for cheap, just anything they can in order to pay off their loans. And this often results in them staying offline for a long time, or in certain cases forever. And so what that does is it squashes out the smaller miners and the less efficient ones. And the efficient miners, they can keep mining because they only need a much smaller amount per day, right, per machine, to be profitable, because they're buried in a mountain somewhere, so they don't have to pay for cooling. They've got thousands and thousands of machines, and they get energy for very cheap or for free, right, from renewable sources. So those sorts of miners, they can keep mining whilst this is happening. So as these smaller miners are forced offline, the bigger miners can capture more hash rate and thus more block rewards. They can also buy these ASICs off of their competition for cheap because their competition has no other choice. Okay, so they can buy these cheap computers, they can buy back even more Bitcoin after they've dumped the price down and hold it for the long term, and then they can benefit from more hash rate and thus more block reward income in the short term. So the effect on price is you often get this one last big push down, like a wick, to force the smaller miners offline and to force them to start liquidating all their capital, as I've said. But the silver lining here is whenever this has happened in the past, it has marked the exact bottom. And it's also possible that we have already seen that low. That's what this sub 20k push is. And so here I've got the miner capitulation chart. And you can see for the first cycle, it looks like this. For the second cycle here, and now look at the third cycle. This could well have been the bottom. And if I'm not saying it couldn't go lower, maybe, but there's a good chance we're in this sort of last wick down now. But wherever this wicks down and comes back up, wherever this low forms, is most likely the bear market low. So make sure you're not selling here. In addition, there's confluence. Plan B has shown that we got here the stock to flow model. We got our first dark blue dot. Look, the dark blue dots mark the bottoms of the bear market. Similarly, Bitcoin 200 weekly moving average. We're slightly below it, but I'm sure it's going to recover in the next week or two, and we'll be back above this 200 week moving average. In addition, the Bitcoin realized cap is telling us the exact same thing. Look, okay? And lastly, the Bitcoin relative strength index. This is as oversold as we've ever been. This is as overdone as it's ever been. It's our entire life. There's no reason for Bitcoin to have taken out its all-time high from 2017, but it has on this enormous panic and liquidity event. We're at record levels of oversold. You know, is this time different? Are we going to zero? No, of course we're not. And stick around because I've got some news that shows you we're not, okay? Bitcoin realized price. We have made the second peak. Whenever the second peak comes, it marks the bottom, okay? Do you see the confluence here? You know, what's the chances that every single one of these things is completely broken, okay? So let's keep going. Nobody has ever lost money holding Bitcoin for 5 years. Fact. Okay, this is just data. This is just fact. So how long have you been holding Bitcoin? How long have you been holding? Throw it down in the comments if you want to. If not, just work it out in your head and then take that number away from 5. Just remember, if you're struggling to hold Bitcoin right now, work out how long you've held it, take that away from 5, and that's how much time you've got left to hold before you're back in profit on a guaranteed basis. So, why am I so confident? Well, firstly, because I have a deep understanding of Bitcoin, but secondly, You just see stuff like this every day. If you go back and watch the videos from my channel, you'll see that there's news like this coming out every single day. Okay, one of Japan's largest real estate firms, Open House, is going to sponsor Bitcoin Lightning Network research. Okay, stay with me. At the same time, Russia's third largest oil producer will power Bitcoin mining farms. Okay, now this thing isn't going anywhere. There's a lot of people calling for ridiculous numbers. There's a lot of people telling you it's going to go to zero. Oh, it's dead. It's this, it's that. Look, just look at this. This is no joke. Okay, it's not going anywhere. You just need to get to your 5-year mark and you'll be fine. Will Clemente says he does worry that retail is going to get shaken out of their Bitcoin positions from increasing volatility, and we'll see the gentrification of supply to the high net worth individuals and institutions before Bitcoin's hyper monetization takes place. Not that this changes the trajectory of where Bitcoin will go, though. Well, of course, first of all, it's not going to change. Nothing can stop Bitcoin. Bitcoin is going to do its 7 and 8 figure numbers. It will. Okay, it's just a matter of time. But also, when he says he's worried that we'll see this gentrification of supply to the high net worths in the institution, yeah, we will. That's how the game is played. You know, retail buys high and it panic sells low, and then it's lost all its money. Once you've panic sold low, how do you get your money back, right? But this is how the game is played. You need to think differently. You need to be a high net worth and an institution in the mind. Okay, you need to understand that selling down here, the time to sell, if you were going to sell, was up at 50k. Okay, this is not the time to sell, especially with all the data pointing to us being at record levels of oversold across the board, right? I've shown you all of this. You know what I'm talking about. Right before we go, I'd like to leave you with this. Here comes the CBD, central bank digital currency. After hyperinflation in 23, Germany replaced one currency with another, which then was replaced with another a year later. When they start swapping currencies, there's a problem. Protect yourself. Gold, silver, and of course, Bitcoin.
Looking forward, rapid changes are taking place in the global monetary system that may affect the international role of the dollar in the future. Most major economies already have or are in the process of developing instant 24/7 payments. Our own FedNow service will be coming online in 2023. And in light of the tremendous growth in crypto assets and stablecoins, we are examining whether a U.S. central bank digital currency would improve upon what is an already safe and efficient domestic payment system. As our white paper on this topic notes, a U.S. CBDC could also potentially help maintain the dollar's international standing. Looking forward.
So make no mistake, okay? The dollar is dying. The dollar is dying. They've already got their CBDC, okay? He's slow playing his hand because they're the reserve currency of the world at the moment. They already have their CBDC. So does everyone else, okay? These things are inevitable because the fiat currency system is dying. Okay, nothing is going to change that because that was how it was designed. It was designed to be inflated to death over approximately 100 years, and we just so happen to be living at the end of that 100-year period. Okay, so the dollar will die, all fiat currencies will die, and in the end, if you don't hold gold, silver, and Bitcoin as a bearer asset as well, that means physical gold and silver in your hand and Bitcoin on a cold wallet. If you don't own these bearer assets yourself, you don't take responsibility for them, then how are you going to survive this? The simple answer is you're not. And nobody wants these central bank digital currencies because they come with absolutely zero freedom or privacy. Okay, central bank digital currencies enable you to be a digital slave forever with no option, no out. Okay, this is why I do what I do. People need to know gold, silver, Bitcoin. If you found value here today, I'd appreciate if you could drop a like on this video. Subscribe if you're not already, and I wish you all the best. Enjoy your weekend. Take care.